It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Light Forex Social Trading. Spend your time doing what really matters to you.
Good morning, guys. 13th of August, but it's Tuesday, not Friday. That's good thing. Piotr here, and as usual, 8 a.m. CET, 7 a.m. London, pre-London Open, live market coverage only here on the Light Forex Global YouTube channel. Before we start, risk warning as usual, guys. Please bear in mind, trading FX on margin, trading crypto on margin carries a high level of risk, may not be suitable for all investors. You can sustain a loss of some or all of initial investment, so please do not invest the money that you cannot afford to lose. Seek education, gain experience before risking real money. However, past performance doesn't guarantee future results. Alright, good morning, guys. First, technical stuff. Today, 10:15 a.m. CET, 9:15 London, we are going to cover UK job markets data live here on Light Forex Global YouTube channel, as well as 2:15 or PM, quarter CET, 1:15 London, we are going to cover live US CPI, so inflation report. So it's going later today during the afternoon meeting. It's going to be all about the dollar. So we have two more meetings today. What else from the calendar perspective? A very busy day from the pound and dollar perspective, but overall the whole week looks like it's going to be important for both, for pound and for US dollar. Also today we do have German ZEF index at 11 a.m. CET, 10 a.m. London. Tomorrow morning session, German preliminary GDP, French final CPI, then UK CPI, and we are going to cover this UK CPI live tomorrow as well. What else we have? Industrial production, flash GDP from the EU, and then during the afternoon session, during the New York session, crude oil inventories. Thursday, that's gonna be the busiest day this week. During the Tokyo session, we are going to get the Australian job market. Europe is on a bank holiday, but UK retail sales, and then during the New York session, very important from the dollar perspective, retail sales, Philly Fed index, and that's gonna be at 2:30 p.m. CET, 1:30 London, as well as capacity utilization rate and industrial production. Friday, building permits, housing starts, plus preliminary University of Michigan. So yeah, it's almost end of the summer holiday, busy week. So that's how it looks. Again, today we are going to cover UK job data later today, as well as US CPI. All right, so that's how it looks from the calendar perspective. Now, overall sentiment, if you've seen yesterday, very negative. Mostly probably because of the situation between Hong Kong and China, the protests in Hong Kong, and the Chinese official Officials call it as an act of the terror, sending troops towards the border. So it doesn't look good. We are going to discuss it with Michał within few seconds. Chart of the day today is a euro pound, and we are of course going to cover pound a little bit later during the job data. But just for your information, holding tiny short here with the stop above 93.30, and the reason is the price action we've seen lately, right? Plus, I think because of yesterday price action, it might be just stop count, the equal size of the waves. So what I do expect similar in size move to the downside here and here, right? But of course, in greater details, we are going to talk about the pound a little bit later today. The risk of sentiment with the dollar yen below 105.50, and before we start to connect with Michał, let's have a look and discuss the situation, the charts. Let's have a look what we have from the option expiration perspective, and we have 105 dollar yen, 1.7 billion, 105.60, almost 800 millions. So looks like we have the band, because of the option expiration, the band been set up between 105 105.60 at least. For now, that's how it looks from the options market perspective. All right, guys. So let's try to connect with Michał. Let's try to discuss the current situation plus charts. Please stay with us. Give me a few seconds, and we will be back with Michał together. Hi Michał, good morning, how are you doing?
Hello, good morning, and how are you? I'm pretty good.
Goodies. Tuesday
Goodies?
13th, goodies, all good here.
Okay. Maybe we will not, because I have the London weather. It's good, but mixed situation outside. And maybe we will start. We will go straight to the point. We will start from the China. The protest began as an opposition to a now suspended bill that would have allowed extradition to the mainland China for those facing criminal charges, but have grown into wider calls for democracy. They also, in China, also nationalized third biggest bank. And we see 10 weeks of the anti-government demonstration that are not. We haven't seen any signs of easing, right? And we can see that the tensions are growing. We see this protest on the airport right now. It's reopened, but there's still. Protestants still said that new protests, new problems may come in the near future. They are saying they are calling for the leader Lam to resign of her duty, we see that also the decline in the HSI index, right? The biggest losers were developers and casinos. So I think the biggest China's businesses, right? The casino in Macau also received the stocks received a big drawdown, and yeah, also we saw the pictures that we all know that there is a lot of violence going on right now on the protests, and the pictures from Shenzhen showing that the military forces China are gathering on the border with the
this Chinese city is a border with Hong Kong. Yeah, just to explain.
That's right, and they caused a little bit of panic on the markets, right? And the fear that it could, of complete paralyze, of the second biggest financial center in Asia, right? After the Tokyo. So it doesn't look good. Also. We see that the problems that the Hong Kong have at the moment are the trade wars with US and the local protests, and they are already seen in the property markets, falling tourists numbers, hotel occupancy, and the retail sales, right? And also the weaker yuan is causing the fall of the falling number of the visitors from the mainland, falling the number of spending their money, spending the money in Hong Kong. And
let me disturb you for a second. In addition to two important points. That at some point China said that the protest in Hong Kong is fueled by the US forces as well. So if you remember the US election, when everyone was saying that was mixed up by the Russians and stuff like this, that's the one thing. The second thing I don't like personally, and think that was the one of the that was the reaction, the market reaction into what they seen on the Hong Kong border. The Chinese officials said that the protests in Hong Kong got the sign of the terror act, and that was the reason to sending the troops. Let's have a look on the charts, because that's the important thing. And we start, it's probably here during our meetings, that's gonna be the first time we are going to watch Hong Kong dollar, which is pegged between 775 and 785, and for quite some time we were rather testing the lower band of that peg, meaning that the US dollar was a little bit weaker. But right now, as you can see, that's the daily chart, and because of this protests going on, we just got back towards the top of that peg. And the key question is if we are going to hold the line over here. Of course, in case of the peace solution into that problem, that might be at some point, I'm not saying right now, just don't get me wrong guys, that might be at some point that might create some kind of the trading opportunity on the Hong Kong dollar. Michał also mentioned about the weakened Chinese yuan, so let's have a look briefly what we have on the Chinese yuan side as well. Just give me a second, guys. Need to figure it out. Where do I have this Chinese yuan? Yeah, there you go. It's 710 offshore. We are still trying to hold. Swing high around 710. But if the situation in Hong Kong will worsen, I think that we might see another attempt to rally. So right now looks like we have this equal waves done. Some kind of the consolidation might go on, and then eventually another in case of Chinese yuan weakness, we might see some kind of the 730, and yeah, but that's the future. So right now, yuan is weakening mostly because of the tensions between US and China, right? Also, the weakened yuan might be the answer into the US tariffs. But yeah, weak yuan is stopping some Chinese to move abroad. That's what Michał pointed out second ago. So overall situation right now, Hong Kong, China, US, China doesn't look good, and it might be, I think it is, the explanation for the risk of on the market. So if we are talking about the risk of, let's have a look on the indices. From the Nasdaq perspective, there was a strong recovery towards the end of the previous week, but of course we know the current situation. So we saw a huge sell-off yesterday again, and from the Nasdaq perspective, it's a very important thing that first, the huge sell-off we've seen at the very beginning of August, 5th of August, this big range over here, right? Thursday, we were able to take out the high and close above. Friday, pullback, and we got back inside that range. Yesterday, same retest, rejection. So right now we do know where the supply is for today, and I think market is going to watch the levels close to 7,700 based on my chart as a possible supply. In case of the possible demand, we have to discuss what we see to the left. Here I'm talking about the lows from the mid-June, 18th of June, the trading range, as well as what happened last Thursday, right? And that's some kind of demand activation based on this consolidation, based on this rally from there. So once we got back last Wednesday, then the Thursday was the continuation. But overall, you know, it's not financial advice, but I think we are going to retest a little bit lower levels. I think that the range we were discussing second ago from the 5th of August, this range, we failed at the top, right? We are testing 50% of that range. So that's the demand we were discussing, and I'm not surprised we see this demand. But overall, I think that the swing low created over here, so the bottom of that range from the 5th of August is gonna be tested. I would say sooner than later. And of course, when we are talking about the risk off, it's dollar yen. So the yen safe haven right now. Safe haven currency right now, we are trading below psychological or important 105.50, and as you can see here on a daily chart, that's this tweezer bottom we've seen previous week. So yesterday gap down, gap been closed, upper shadow testing those lows from the 6th and 7th of August. So failure today during the Tokyo session, failure, rejection. So we are right now still trying to hold 105. Just the reminder that there is a good chunk of the money from the option market expired at 10 a.m. New York at 105. So it might hold towards the US Open. But as long as we are below 105.50, probably we are going to see lower levels. The thing is, and I've mentioned about that some time ago when we were talking about the growing trade tensions between US and China, and right now the whole situation in Hong Kong, that might affect the whole region. The whole Asia might be affected. So the question here might be, if at some point the Japanese yen is going to be still treated as a safe haven currency, but we are going to leave it as an open question for now. No doubt what we see here for the last 10 days, no doubt there is a yen demand on the market, and when there are going to be the more time later today during the afternoon session, we are going to try to go through a few other yen crosses. Michał, back to you.
Yeah, I want to add something about the Hong Kong dollar. You mentioned this rally to this resistance, and I think it's also the reason for that is that the investors from mainland, from China, just on Monday bought shares on the city on Monday. Around 289 millions. So I think they're trying to. That was one of the main reasons that they are trying to take advantage of this situation, and I don't know, maybe some small manipulation, some pump and dump, or something.
That could be the case. Very good point. That could be the case. Of course, what I've been talking about, the direct investment into Hong Kong dollar, and you've mentioned about via shares. That could be the point. Of course, it's a huge risk right now. But we will see. Okay. Anything else about the Hong Kong China, or we can go further?
I think that the rest everyone can read in some articles. So I think we can go further because we have a little time left. You've mentioned about the Japanese yen, so maybe I will tell briefly, because the situation with the yen, as you mentioned, that the situation with China can affect the whole Asia, and I think we are seeing this right now because. Yesterday on Monday, the Japanese exchange was closed, and we had the announcement from the South Korea government that they excluded Japan from the list of priority trading partners, and
that's the revenge.
Yes, that's right. And this inclusion, and they created list. They put the Japan on the list with the trade restrictions. So we have a new trade war, and directly in Asia itself, right, between two neighbor countries. We see another escalation of the conflict, and I think it's as you mentioned, sooner it might the yen might not be seen as a safe haven. When those tensions will grow, right, in the Asia, I think Mr. Trump is having a little smile at the moment, because I think he wanted that too. He was mad that the data were from China were good, and right now at last he sees some disturbance in on the other side of the line. I would just also want to mention about Australia, because it's also under the big pressure from the trade wars. As we mentioned many times, China is the biggest trade partner, business partner of Australia, and yes, the latest statement of the head of the RBA. Sir Lowe said that he doesn't exclude the possibility of another rate cut to the zero according to the numbers of the unemployment, right? It's not falling, and the inflation still it's not near the 2% target, right? So he said that, but also he mentioned he tried to give some, I don't know, some good perspective that they are already on the turnover, and the worst is behind them. I think it's the opposite, but he as a head of the as a head of the central bank, he needs to give some good perspective also, right, for the investors. So that maybe you will go for the, yes, I see that you already are on the chart.
Yeah. So the key thing here to the downside, is the previous week huge sell-off. We hit 66.77 as the low. Right now, once we got back above, we're trying to create some kind of the swing low. So yesterday's sell-off stopped around the low created on the 5th of August, and we are trying to hold 67.50 right now. But in case of the depends risk of sentiment, I think that's gonna be broken, and the retest of the low might be the case. Into the negativity, if you want to add something, that's we are still below yesterday open or weekly open around 67.80. That adding into that bearish view. So from the bears perspective, we want to break through 67.50, 67.40. That will open the way towards 66.80, and market may want to look the stops below. In case of the move above weekly open, in case of the move above 67.80, we might see equal waves moves to the upside. So in case we are going to get that move from the previous week low towards the previous week high, and we are going to check what might happen, then something close to 68.80 and 69 could be the case. So it's all about overall situation on the market, and here we're trying to hold the support, but it looks that pound Aussie might be the alternative if you are looking to the short side of the Australian dollar, because all of these things going on in Asia, right? So it might be affected, and in that case, as we saw, the pound is trying to find the floor, pound is trying to find the support around the psychological 120 level, right? As I mentioned before, from the cable perspective, pound USD, it would be good to see the cable for bulls above 2080, 2120. That would add the fuel, and we might see the overall pound short covering on some kind of the pound rally, if you wish. Right now, here from that pound Aussie perspective, the yesterday open, yesterday low, Friday low might work as some kind of demand zone. In that case, we are talking about the levels in between 77.50 and 77, but more about the pound, of course, during our meeting at 10:15 a.m. CET or 9:15 a.m. London, when we are going to cover UK job market. So yeah, that's about the Australian dollar. Anything else, Michał?
Just a few words about the oil, maybe. We have
Sure.
still time. So we can say that the oil price is influenced by opposite factors. On the one hand, we see the pressure from the investors related to the aggravation of the conflict between the United States and China, and the recent comments about this, that Donald Trump want to suspend the talks in September between the China and US, right, about the trade war. And on the other hand, we see the active actions from OPEC that they want to maintain, that they are causing the price to maintain at certain level, as we see right now. And we have also the positive reaction from the latest Baker Hughes report, right, about the oil rigs. At the moment, we see the fell from the 770 to 764 units right now. So I think at the moment we will see the some kind of consolidation from the. You are on the chart already?
Yeah, I'm on the chart, on the oil chart. It's a intraday oil chart. So let's go through the chart from the intraday perspective. The thing is that the latest sell-off we've seen on the 7th of August here from the 5370 down towards as low as 50.50, right? Now the previous week Friday we've seen recovery through this broken level. So yesterday was the retest exactly to the point, some kind of over-under creation. So in case of the failure of that range, right, because we tested the top of that range yesterday and we hold that range. So in case of the whole move to the downside, in case of the continuation, we might see levels closer to the 57 and especially today, later today, 10:30 p.m. So half an hour after US close, 10:30 p.m. CET or 9:30 p.m. London, if you wish. We are going to get this API private data related to the oil, and tomorrow, don't forget, we have official EA release. So in that case, the bears are waiting patiently towards 57, or in case of the break of yesterday and close below yesterday low, we might retest the half of that range, or even we might retest 50 again. You know, OPEC may want to try to to hold the agreement in place to cut the output of the oil. But you know, if the situation in the world is going to worsen, there's no way we are going to see the higher oil prices. We might see higher oil prices if there is overall economic growth going on, world economic growth. But if we are slowing down, then no way. And still, from the long-term perspective, just guys, don't forget, long-term perspective, I think that we are going to retest the levels. I mean, we are going to break. Let me make it different way. I think that, okay, anyway, I'm not gonna to make the measure, but we are going to retest the levels towards 40, and I think we might see even lower levels based on this huge wave over here, from here to here, from here to here, and we are talking about the levels close to 32. But again, it's a long-term view in my opinion, especially based on this world slowing down overall. Michał, back to you.
Okay, another weak point on the market, maybe the Eurozone. We have this German ZEF economic sentiment, the data. And yeah, we have the situation with the Italy, right? The
government is on the verge of collapse.
Yes, that's right. The pressure is on the Matteo Salvini, the Prime Minister of the Italy, and right now we see the Eurosceptic movement Lega. They are calling for the early elections, right? And after that, they are gaining popularity, and right now this weird coalition of the two opposite directed parties. If they may reach their target of this election and win, and eventually win that, we might see another conflict with EU, considering that they can't agree about the public debt and the deficit, right, of the budget. So yeah, it's another little. It's another like the tension, the pressure from the outside, from the inside, excuse me, from the inside on the EU, right?
And there
We
is
have to
supposed to be the decision today over the
Yes.
no confidence vote for the government, right?
Yes, it's.
The
I
decision
read that
today, the voting is gonna
supposed to
be.
be tomorrow, but I think yeah, if did not they didn't made it tomorrow yesterday. I think today it will be certainly made. So yeah, today it's a hot day for the trading on euro. Yeah, so
So two words
we
about the chart.
two words about yes, right.
About the
I
euro dollar chart. As we can see,
very,
that's the
very
daily
briefly.
chart from the daily euro dollar chart for the last 6 days. Only upper shadows, meaning that still the supply around 1225, 1250 is in place. Everything is based on this tweezer bottom we've seen and we discussed previously. We are talking about the I'm sorry, we are talking about the low from the 18th of July and 19th of July, right? So upper shadows. Yesterday we saw the attempt to break lower and we went through the Tuesday, Friday lows and we hit finally the latest manipulation zone around 60, right? So we know that supply is 1225, 1250, but if you remember, we were discussing euro dollar possible demand, and the first one was around 1160. So finally we hit that level, and we've seen the reaction, positive reaction to the upside, but it's no continuation, at least for now. So we might see retest. In case of the retest, we might see attempt to break lower, and if that's gonna be the case, next bound of the possible demand is around 1140, 1130. If we are going to break through that one, the psychological one 11, and finally 110.50, the swing low over here. Overall, there are ZEV index, as you mentioned earlier today. Sorry, that's as you mentioned a second ago. The ZEV index from the Germany, that's the one risk event, and the second risk event, of course, is the US CPI later today. And we are going to watch very closely euro dollar again. For now, 1225, 1250 as a possible supply. For now, 1160 below, 1140, 1130 as possible demand. Michał, are you going to join us this afternoon for the US CPI?
For the US CPI, yes, I will be joining you later. Yeah.
All right. Michał, thank you very much for your inputs. Thank you very much for your comments. It was the pleasure that you were here with us. Thank you very much and have a great London session.
Have a great time.
Thank you.
Bye.
And see you around.
See you later. Bye.
Alright guys, so we are pretty much discussed almost all important things. We have the continuation to the downside on Nasdaq. That's what I've mentioned before. So looks like a risk of sentiment towards the London Open, and be careful guys. Don't forget, 10:15 AM CET or 9:15 AM London, we are going to cover live UK job market here on Light Forex Global YouTube channel. For now, that's it. Have a great London Open and see you within the next 1 hour and 30 minutes. Goodbye, guys.
It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally. and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Light Forex Social Trading. Spend your time doing what really matters to you.